Good morning, everyone. Welcome back to another episode of FarmCon Conversations podcast. I'm co-host Todd Loechler from the Panhandle, Nebraska, with my good friend Kevin Van Trump in Kansas City. Kevin, how you doing this morning, sir?
Doing great, buddy. Doing great.
Well, I'm glad to report that we are. Looks like most of the fires out here are nearly contained and stuff. So winds are dying down. So hopefully we get back moving forward. Now it's just going to be the moon dust blowing all over the place. It looks like a freaking desert out there. So it's freaky, but everybody seems to be under control. So that's good.
What'd it burn? 1 million acres?
Just under that. That's
right,
800 to 860, depending on what. There's still some little ones left enough, so it'll be close to 1 million, I'm sure, when it's all said and done, assuming we don't get any more. But yeah, doesn't look like there's a huge loss of life of cattle. Mostly it's going to be a feed issue, and I know there's a lot of people helping out hauling in hay to the area. So everybody's doing their thing as they usually do. So all good there. Did you do any auctioning this weekend, Kevin?
We didn't. No, well, I shouldn't say that. I actually did online. I mean, we didn't go any in person, but I did online, and a few interesting things I did on, and some Indian type, Native American type of artifacts. One from the Crow and one from the Sioux, I think, and there was a Cherokee peace pipe type of war pipe, I should say, that I bid on, and we won. So, yeah, I got a couple, 2 or 3 things coming that I thought had some longer term appreciation. But yeah, it was fun. So we're actually selling building that we had. So we've been doing a lot. Michelle and I have been doing a lot of packing and moving, and got my knee all checked out. So it's good times. Just getting old and things falling apart.
I remember when I lived in town. Those are fun days. Let's go.
Oh, yeah.
Let's clean this place up, man.
Yeah.
So,
same old thing. Nothing changes.
Exactly. No, it does not.
Right.
Cool beans. Let's dive in, man. Let's get the corn, bean, and wheat, current thoughts, positioning, what you're thinking, and a couple other topics. So fire away, baby.
Yeah, and I'm getting close to another new crop corn sale. We've got that 30% range price and a little bit hedged and estimated new crop. I got some targets in place out there, and the D's up. Well, I'm just trying to cheat it a little bit. I think there's a ton of orders sitting up above $5, so I'm just underneath there in between $4.95 and $5, just trying in case there's some type of major resistance up at $5. I don't want to let it one tick me. So, I'd like to get to 35-40% priced right here ahead of planting. It's a comfortable spot for us. I'd like to make another small little bean sale. Had some orders working out there. Didn't get filled in that on the rally. We did price quite a bit. We have 35% of estimated new crop beans priced. I had some price targets in there, I think in that in that 1190, 1192 range. Never got to that high, Todd. We got close. I mean, I think we got up to 1180-ish, somewhere in there. I had originally had some orders at 1178, 1179, and then I kind of moved those higher. We still wouldn't have gotten those triggered as well. I think the high on the move was 1174 and a quarter. So, like I said, I'd like to feather in a couple more sales, some corn and a little bit of beans heading into it. As far as wheat, Todd, we have 50% of new crop price. We've used the rally to make some good sales. We got some off there at that right at that high that day, close to that 640 area versus the soft red. And I'm just sitting there now, kind of just scratching my head a little bit because we got to see a little bit of what's going to happen here with the weather. We got the war headlines, obviously, the conflict in the Middle East, and we've got some coming into weather markets here. So, I think I'm just going to sit here on pause for a minute in wheat. And like I said, maybe get a little bit more corn priced. I think there's some upside potential still in corn. The reason I say it is from just a balance sheet perspective or a traditional fundamental balance sheet perspective, I got a bearish tilt. I'm holding some bearish soybean option position, I'm holding some bearish wheat positions. But as you know, I believe there's 3 main drivers for a bull market, or I should say if we're thinking about an engine. I think it's a 3-cylinder to get this thing going, and you got to have 3 things. You got to have a strong demand story. which I think we're having right now in both corn and beans. You got the president inviting a bunch of farmers out to the White House on Friday with a lot of biofuel execs, and I think obviously there's going to be a bullish announcement on the biofuel and renewable side. I don't know how the market responds to that. I'm worried that it could be a buy the rumor, sell the fact type of play where we funds are big buyers going into it, and they may liquidate and bank some profits as the headlines are announced. We'll have to see how that plays out. So I think we do have a strong demand story. There's some questions, obviously, about Chinese demand and how that plays forward with President Trump and Xi's meeting being postponed. But, again, I still think we have a strong demand story. Number two, to make a really big bull market, you need the funds to have a bullish attitude and want to be long. And we've seen that. We've watched them flip from short corn positions to long corn positions, and we've watched them hold now. They're holding a near record large bean position, and they're still short some wheat, but maybe they'll flip and become more bullish the wheat here. So you get a strong demand story, you get the funds wanting to be bullish, and all you need is a weather story, Todd. You get a weather story or a supply side story of some sort, there's more room to the upside. I don't know if that's going to happen. We're going to have Gary out here in a little bit to tell us a little bit more about the weather. So I'm kind of hesitant to get wildly bearish. And I really don't want to be wildly bullish at this price elevation. If prices were a lot cheaper, as you know, Todd, you and I had a game plan. We were going to buy calls, and we were going to kind of load up on the long side if corn got down closer to $4, $4.10, and if beans got down there closer to $10. Couldn't get that low. We missed our window to get long, and now here we kind of sit. So I don't really want to be a big buyer up here just because I'm worried if the weather story really doesn't play out and we have another great crop. I mean, we try to grind this thing sideways to lower. And in the same token, I don't want to be an outright futures bear holding some big short positions just because I don't want to have to try and navigate a weather market and have to play and try and trade myself out of that mess if we were to get some upside pressure due to some weather concerns. So, my best play for me at the moment is I'd purchase some various different put positions or have some various different put positions in the bean market and the wheat market. I was able to get lucky and get in ahead of that limit down move in beans last week, and that gave me a chance to really bank profits on those positions and pay for my other positions. So really, I'm in it for not much risk now. So I'm gonna just let this thing work and see how it plays out. But I think you just got to get yourself in a position right here where, like I said, I like to be 30 to 40% priced. That gives me some room. If we make another run higher, I'll be pricing into it. And it gives me some time on the clock in case we break and this weather story doesn't play out. We'll have quite a bit of time still to make sales as we move forward. So, that's kind of how I'm playing it right now, Todd.
All right. I want you to comment on my remedial thinking because you talked about, if they're buy the rumor, sell the fact type of deal. So going into Friday, assume it's bullish. Either way, regardless of the news, and my thought process was this. Either way, if it's bullish, like you said, I agree, man. They're going to take the profits and go. If it's not, then what's the headlines going to be?
Well, I mean, that's kind of the big question. I mean, it doesn't – and you can't sit here and say if it is bullish, they're going to take the profits and leave. I don't know. They could add to it. They could really defend their position. They want to dig in here and build a bigger position. So with crude where it's at and the way things have moved, I mean, that's the one saving grace is that, you've got higher energy prices. So you got to think about this in a little bit two different ways. These higher energy prices are really, really hurting some of these foreign countries. A lot more than they're hurting the United States. And so you're seeing massively higher gasoline prices and jet fuel prices in other parts of the world in comparison here. So, we're hearing talk, like say in Argentina or some of these other places where the inflation is just going to rip their face off to some degree. You're seeing, I think they're slowing down a little bit on their crush. Some other places are going to slow down on their crush and look to the U.S. to provide the crush. So there's demand. I think you're going to have increased demand with these higher energy prices. And so there's a strong chance the funds want to defend their big net long position. And even if the market breaks, they're going to be buying it. And even if the market rallies, they may add. So it's like there is that chance. I'm just worried that, you could have a strong knee jerk to the upside, and then, and then before the day's over, we close the darn thing lower and maybe lower the next couple of days. But that doesn't mean it's over. I mean, that just means you may have a sell-off or some profit taking, and some of your weaker bulls are getting out or something like that. So, if we get a real big pop, I want to use that. Like I said, I want to use that to price a few more bushels, and then maybe we see a setback or something. The market catches breath and takes another run higher. But, I think the funds are long for several reasons, and I think they want to be long here for a bit. So, I don't think they're just going to swing back to a short position anytime real soon.
So if Gary comes on and says, if we were to believe that there's going to be some drought issues in the corn growing in the eastern corn belt, the ice states, whatever, is that going to affect with the burdensome carryout we got? Will that affect how high prices can go? I mean, is there no limit to that based on obviously drought gets bad, but are we kind of at a cap with our 2.1 billion carryout right now for what corn can do this year without a complete disaster?
No, I don't think so at all. I mean,
okay.
Well, I mean, you're at 2.1 billion, but if you get a weather story and you start to, you start to chink the yield down a little lower, and you get these acres down. I mean, hell, you could be sub 1.8 in a real hurry and moving lower. And the story would be on the front end. As far as the weather story is concerned, and there's no reason. I think you're in a position now with some of these commodity markets and the way this money's sloshing around and moving around. You can see explosive moves to the upside. I almost believe the upside's more dangerous than the downside, as I've told you that before. I mean, just look what they do to some of these markets. Look what they did in silver market. Look what they did in the gold. I mean, how high they raised.
That's a fact.
I'm just telling you, you get on the wrong side of this thing on the short side, you can get really beat up pretty bad. So, no, I think there could be a ton more potential. There could be a lot more room added to corn to the upside. Beans, I mean, they're holding their record or at record fund position long at the moment. So can they add to that? Certainly they can add to that. But I don't know how much more. I don't know. That's why I'm holding some these bearish put positions, And you can pick some up. You can buy some beaten up puts as we're rallying. I like to buy them when we're rallying higher and buy the puts at the when they're discounted, at least field discounted to some degree. So,
right.
That's how I like to play it. So, yeah, I don't know. I think there could be a ton of potential. That's pausing for a moment. But, yeah, go ahead.
What we got? I believe it's next Tuesday, the USDA Prospective Planting Report. Any new thoughts? We still think it might be
Tuesday with quarterly stocks and a prospective planting report. I think most guys are really paying a lot of attention to prospective planting. There could be a few surprises in the quarterly stocks, but net, I think the trade likes to believe that combined corn and bean is going to be somewhere around 180 million, maybe a touch under, maybe you're 179, somewhere in there. But how do you divide that and slice that up? I wrote in yesterday's report, I said, I feel like most trades looking for 92.5 to 95 million corn acres. It's a pretty broad range, but that's just my take. And we planted 98.8 million in 2025. You planted 90.9 million in 2024, 94.6 in 2023. So, you're somewhere in that. I guess I'd probably say we're somewhere around 93, 94 million corn acres. And beans, everybody seems to be talking 85 to 87.5 million. Bean acres planted versus what would have been last year, just over 81 million. We planted like 81.2 million planted last year. I think we planted about 87.3 maybe last year in 2024, and then 83.6 in 2023. So, like I said, you're right in that realm. I guess you're going to see some acres move because of the higher input costs. Like I said, you may get some disruption in the fringe acres or, the non-diehard corn on corn. So it's like I just, like I said, I don't think there's going to be any huge surprises in the acres unless you get some really big spring weather hiccup, which, again, we'll be talking to Gary on some of this planting. I think, you're going to have some guys out there planting here real soon. So, the planters been rolling down south and then through Texas and up making their way north. And, I just think you're going to see some guys get out there and start to crack it. I think we got a big warming trend coming up right around the corner. I think tomorrow here in Kansas City, it's going to be close to 90. So, like I said, I guess we're going to dive right in here to planting season. So, be interesting to play before, yeah.
Definitely. Well, let's jump over to stocks and trading, investments, et cetera. Since we spoke last week, we probably haven't had a whole lot change except a tweet that went out yesterday, but kind of give us where you're at. You've kind of published a couple different things. There could be a knee-jerk rally on some de-escalation. I think we saw that, but then you also believe there's more downside in your position accordingly. So kind of lay out where you're at right now, brother.
Well, yeah, we're still way overweight cash. We're holding some. Obviously, we're also holding some bearish hedge positions against our current portfolio just to give us more downside protection. So net, we probably don't have much exposure at all to the downside. But again, I don't really have that much. I'm not gonna participate much. We move to the upside, right? So I'm kind of over here just kissing my cousin. He can. We got the down. Like I said, we got these hedges in place, and they're making some good money on the downstroke. But I'm obviously losing some in our longer position, but we've trimmed that down. Like I said, I'm holding one of my larger net cash positions that we've held in a long time, and I just think the underlying landscape is worrisome. I'm just worried. The biggest question is going to be, Todd, what shape is the consumer really in? I can't get my head around it. Because I just see the younger people just out spending like wildfire still, Jordan and Kennedy and their friends. And I know that they're, a lot of their friends have gotten laid off or can't find some jobs. And I think it's getting tougher on some of these folks. So I'm worried that I don't think we're going to see employment strengthen. I have to believe employment continues to weaken into the early phases of this AI adjustment. So that makes me believe we're going to continue to see some weaker employment numbers. With the higher energy prices, how long does it take to weigh on the consumer? And at the same time, but you got to believe interest rates the real rates, like at least on the back end, are going to stay higher for longer. I'm not really in the camp that the Fed is necessarily going to hike, but I could see them cutting a lot less, and I could see them definitely staying on pause a lot longer. In the back end, and I should say, real rates could inch higher, or at least stay inflated, and that ultimately weighs on the consumer. And then you got to start to say, the market then will start to look to reprice valuations as margin compresses. As the margins compress, the most of the insiders will start to look to reprice those valuations and move things lower. And then you start to have an overall profitability concern, and it starts to be questioned. And, then the next thing, you got a lot of people heading for the exits. And, that's what I'm worried about. I'm looking at each rally as an opportunity to really just kind of reduce more long side exposure and actually build into some deeper, longer term bearish hedges. So, like I said, I think President Trump's going to do everything in his power to keep the stock market supported. So that's the opposite side of that, Todd. But I just don't know. I just don't know if people can continue to just buy every dip. And at some point, the investor is going to say, wow, these things are trading too rich in evaluation essence compared to where they should be. And, we were traded as high as 22, 23x. There for a while, and the highest we'd ever traded really has been 24x during .com bubble, and we pulled back now. We've had a nice little pullback from the highs, and so I don't know. I'm sitting here just a little bit nervous, and maybe, like I said, that's just the mindset I have of trying to just protect my money more than making a ton on my money, and so I'm playing more of a defensive game to some degree than I probably should be, or especially when I was younger, but I just think that's the way to position, at least for my family, myself. That's the way I'm going to position my portfolio, is just try and stay defensive. But, we really lined up, luckily, we really lined up that gold and metals exposure ahead of the big break. I think as I talked to you last time, I said, we were worried that when gold and silver didn't bounce to the upside or didn't take another leg higher off the news going into the Middle East, we were concerned. So, I think we were lucky and blessed to trim those positions way down, and so now I'm just kind of sitting counting 10 Mississippi before I look to re-enter, but we haven't really added to any of those as of late, and I really haven't added to any stocks. So I think I've added a little bit to maybe a Boeing, a little bit to a Home Depot. I haven't bought more Lilly as of yet. I'm still holding. Lilly's probably still our top position from as far as weighting is concerned and size, and haven't really added any, even though it's broke. We haven't added any to Goldman on its big break. We're just, kind of enduring a little pain on those sides and picking up some money on the opposite side on the short hedges. So, that's really how we're looking at it. Todd, go ahead. You got some questions?
Well, you mentioned about Trump will do everything he can, and I agree, to support the market. Any comments or thoughts on, was that tweet yesterday a support of the market?
Well, yeah, I think
intentionally.
Well, I think he's got to try and talk the market up on the breaks, and I think it's a good game plan. If he can talk the market up, add, a couple hundred points to the S&P just off a few tweets or a few comments here and there, what the heck? It helps keep it somewhat supported from just a free fall, or, it does provide some break questions to the depth side. Like I said, I'm just worried that, you get the knee-jerk. Let's say we announce that the conflict in the Middle East is over. We come out with all kinds of things and reasons why it's great, and the market rallies and sats off for 2 or 3 days. I'm just worried what comes behind that is going to attract the new bullish money flow, and what takes this thing back past new all-time highs and continues to run. I don't know. That's where I'm kind of worried. I'm worried that we could get the knee-jerk back up, you could run it pretty good, but then we may just fall again just because the bull may be a little bit exhausted here and may need to breathe. And I'm saying you can see a pullback. I got my eyes on 6,100 in the S&P. I think that's where we're just over 6,000, where the S&P was at when President Trump took office. I don't know if he wants to let it go much below that area. And, you just got to be sitting there bracing yourself. I think there's been 12 times, there's been probably, 12, 13 times that the stock market overall has had a 10% or worse year. They lost 10% or more on the year. And I think there's really only about 12 times that's happened. But interestingly, most of those contain some type of massive spike higher in energy prices, some type of, war, military conflict, and some type of goofy position that the Fed ended up finding themselves in. And, you kind of have all three right here. So that's why I'm just nervous about the underlying landscape, because the makeup and the pieces of that recipe are very similar to what we've seen on some of these other years. So you got 100 years. If you're looking at 100 years of the stock market, since, let's just say, from 1926 forward, there's been about 12 times you've had those big pullbacks. So it's about 12%. 12% of the time you're going to have a sizable pullback. Not very often, but there are those occurrences. And I just think the pieces of the puzzle are there if, right? And so that's why I'm just saying I'm a little bit nervous here and thinking that you could see a negative number, as this thing plays out. So.
Well, so you showed me a chart the other day. Really interesting, that just showed how far above we are. With the stressed valuations that we have and above the mean line, et cetera, and stuff. To where you look at that and you're like, okay, we're definitely in the time frame that something's got to happen, either to pull back at some point. And you're also, now you don't see the headlines. You're going to keep it going. So it sounds like you'd have to be in the camp that we were definitely going to start pulling back towards whatever they call it, the mean regression or the mean line.
Well, most all markets, I always tell Jordan, since I've been trading for the number of years, 30 plus years, is that, trees don't grow all the way to the clouds. They stop at some point. And at some point, I believe most all markets can't continue to stretch as far as they stretch away from the mean, meaning if you say the mean is the 200-day or the 100-day moving average, whatever you want to say, all I'm saying is when you look at a chart and the market is stretched massively, massively above that 100, 200-day, at some point it tends to revert back to the mean, meaning it gets closer. It'll end up getting a lot closer to that 100 or 200-day. And I think the market, at this point, got really overstretched and had to have a sizable pullback. Now here we are teetering around the 200-day and 100-day. It's, where does it want to go from here? Will the funds and the bears stretch it now aggressively to the downside, and then again we'll snap back closer to the mean at some point, or will they take it again straight back up and then stretch it back, to the upside? I don't know. That's what I don't know. We're sitting here hovering right around both of them. We're below the 200-day in each, but look at gold and silver. I mean, look how far gold had got stretched away from the moving average, the major moving average, and now here we are right back to it. And same type of story in silver. Silver still has more room to travel to get back down to its 100, 200-day because it was just such a parabolic move to the upside. But like I said, if they're really truly demand-driven bulls and demand-driven bull market, they'll give you opportunities to get back in, and here are some opportunities as you get back closer to the mean on some of these markets. So, it's the same soybean story. I felt like soybeans got way overstretched to the upside there for a bit, and it probably needs to work its way back to some degree at some point, and then make another move from there. But that's how I'm seeing it set up, Tom.
So throwing this into the mix then for where we're at now, we recently, discussed that tweet that, since 2000, there's 50% less publicly traded companies now. So there's a lot more money going into a concentrated pool. How much is that playing into the bull market? Being able to stay maybe extended for a while longer.
Yeah, I think that's something. I don't know what it really means as a whole, right, because the S&P 500 has been around forever, and same amount of, you could play the same way back then as you could now on playing the S&P or however you want to play it like that. So, yes, there are fewer stocks publicly traded, which means you technically have, more investors now than you had, say, back in the 1980s or 70s, and they're chasing a fewer number of stocks. And so, obviously, you create a more of a demand-driven market from that stance, but you can also, just as I always say, hey, it's awesome having the funds in these markets because without the funds, we wouldn't have chance for $8 corn. But at the same time, with the funds, you got a chance for maybe the market to move to extreme lows. So, I think it's good both ways. You just have to know that it's going to be more extreme and more volatile in both directions. So, I think that's really what we're seeing here.
Yeah. Well, let's jump in. You touched on Fed. You made a few comments on the Fed, but let's just touch it again real quick. With all the balls in the air, I showed you that tweet that said, this guy who's a big gold bug and believes we're in a structural bull market for gold. It's going to go back up. He's saying, the government's got. He goes, they're going to have to drop rates just to cover, to make debt payments affordable. And you say what?
I say I don't think they have to do anything. I'm never in the mindset as a trader. I don't like to lock myself into any one mindset. That's why I'm saying you got to stay open-minded. I think the Fed could raise. I don't feel like they're going to anytime real soon, but there's certainly a chance the next move could be higher. They could stay unchanged, and inflation just stays stubborn, and they don't have a choice. So, I don't know on that front. I think, the big worry is that real rates stay higher for longer, and that's kind of the fear that I have. As far as what you've seen happen to gold and silver, I guess, is that one of your questions?
Well, no, not specifically. It's just that was his reason for, that, hey, man, he's like, hey, man, they're going to lower rates regardless of all the employment issues, inflation issues. They have to. That was his thing. And I view him as a respected source, but I'm like, man, that's, like you said, he's locked in, and that may be might be his blind spot right now. So I was just curious what you thought on the debt payment as a potential factor.
Well, the guy's out. Whoever the guy, it's his opinion, but shit, why didn't they cut in 2022? Why did they raise so aggressively in 22? There was massive debt then.
Yeah, no, good. I just want to throw it out there as a young learning man.
That's on a massive rate hiking spree. And there was still massive federal government debt. It didn't seem to faze them.
Good point.
I think two mandates. I don't really think they care about I don't think they care about the national debt. That's Congress's problem and the White House. Right? I think the Fed's mandate is inflation and employment, and I think those are the two main things they look at. So, I mean,
one thing on the back on the energy thing, Strait of Hormuz and stuff. You made the comment Monday that you are not in the camp that we're going to see long-term extended storage of energy supply. Why do you believe that?
I don't think we're necessarily going to see any shortages of energy supply. I think some of these other countries are. I mean, I mean, look at the map. I mean, we're creating more energy than I think Russia and Saudi Arabia combined. I mean, we're a massive leader in energy. Now, is China going to have some problems? Yeah. Is Japan going to have some problems? Certainly. Is parts of Europe going to have some problems? No question. I mean, they're already seeing massively higher jet fuel costs, massively higher gasoline prices. I mean, this puts a ton of pressure on some of the global economies. I mean, a ton. And that's what I'm saying. You could see more of a global recession than you possibly could a recession here in the U.S., but, you know, maybe that's one of the plays. I don't know. Maybe that's something. I'm not sure, but it's going to impact us a lot less than it will some of these other nations. So that's why you're going to see them throw a little bit bigger fit on this than we are.
All right, one more thing before we get to Mr. Lezak. You wrote I think it was last week, that you're having your first ever official family financial meeting, and I wanted you to share that with folks that may have missed it, and just why you're doing it, what the reason is, what you didn't have when you were a kid, et cetera, et cetera. I think it's a great idea, and a lot of folks can benefit from it.
Yeah, and real quick, because I've had people write in about our thoughts on this gold and silver and these precious metal markets. I mean, you got to realize that you've had some heavy pressure in gold and even silver. You've had some of the central banks coming out. The central banks became bigger sellers of gold these last few weeks, and really that tends to happen really as they try to manage their currency volatility, and they try to, defend their local currency, and they have to fund energy purchases, you know, when they want to be liquid when they feel like there's some economic stress or some problems ahead. So we have seen some central bank liquefaction in the gold. And I know a lot of people were saying, oh, yeah, they got to be big buyers of gold. Well, they don't. Again, here they are selling. They don't have to be big buyers of gold. And, they're selling, like I said, to capitalize, to raise capital and to make purchases. Like I said, energy prices are a lot higher. So there's a lot of things that have escalated or gone up. And that's why you've seen some liquidation. I still think longer term, I think gold's gonna be a good play. Not as confident in silver, so to speak, but I think silver has a bigger room to pull back. And then I may become more confident. Like I said, gold's hovering around 200 a day. We're not really adding into any of our positions as of yet. I still think there could be a decent amount of more room to the downside, but I think longer term, the precious metals and the industrial metals are probably still going to be good, strong plays in the months and years ahead. So just touch base on those, Todd, where our current
thank you for that. Good stuff.
Yeah, but no, on the family thing, yeah, we all got together. It was the first a couple of different traders that told me they had done it with their family and kids, and you know, I thought it was great. When I grew up, I mean, that's top secret. I mean, nobody in our family ever talked about if we had money, if we didn't have money. I could just kind of assess by the way things played out that we didn't necessarily have money, Todd. So
baby.
We probably didn't need to have a big meeting about it. I just seen plenty of blow-ups around the house, and Mom seemed to always be on the defensive about buying me a pair of shoes for sports or something. You know what I'm saying? You know, and Dad's like, hell, he can wear the shoes from 2 years ago. So, like I said, I doubt there was a lot to discuss at our house, kids, and and so I do think, though, I am a big believer, and as I've listened to more and more families that run family ag businesses or have family farms, I am trying to be more aware of my current situation, meaning my situation or our situation as a family in Shauna is much different than when we were kids. And when we were kids, I probably didn't need to know a whole lot. There wasn't a whole lot to discuss, like I said. And it's like a lot of these family farms and a lot of these ag businesses, you know. Let's say the guys that are my age, 60s, 50s to 70 years old, and they took over an operation from their folks. or a business from their folks. Maybe there was only 1 or 2 trucks involved. Maybe there were only, 100 head of cattle involved. Maybe there was only, 500 acres of ground. Well, now, the 56-year-old, 70-year-old who's looking to turn that over to his kid, now maybe there's 50 trucks involved, or maybe there's, 500,000 cattle involved, or way more than that. Some of my guys have gone massively huge in the cattle. And then maybe there's thousands of acres being farmed. Well, the training program for the small operation or the 2 vans, 2 trucks, and 100 that training is much different than the training that's needed if the kids are gonna step in and manage something much larger. And that's all I'm saying. And so we can't get so tripped up in tradition and say, this is how my daddy did it and his daddy did it and his daddy did it. That's fine. But things are different for a lot of operations now. The operations have become, much larger. Much more money is at stake. These kids are handling a lot more risk. There's a lot more moving parts and pieces. So Michelle and I discussed it, and it's like, shit, we've got to really change on our end, and we've got to be more open and transparent, and we got to walk these kids through what the hell's going on and what all these moving parts and pieces are. Because if we go out and get hit by a bus, they might be shit out of luck on a little bit of this. I think they could be lost, and they could have a tough time. And like I said, the reason a lot of, people that win the lottery, commit suicide or end up going broke or have real hardships is because no one's ever talked to it. They don't know any of it. And then the next thing you just give them a race car to go drive and, well, shit. They're going to hurt themselves. And so Shell and I said, hey, look, we got to be open and transparent. Here's all the moving parts and pieces. Here's everything. Here's where everything's at. Here's all the banks that the stuff are. Here's the buildings that are, we just went through everything. And like I said, that was good and all. And the kids asked tons of questions. But like I said, the other good thing is that, it brought to light, Jordan's really been focused on trying to build his overall wealth. My daughter really hasn't had that mindset. So Jordan's gone out, and through the last 5-10 years, he's purchased and flipped and done a lot in real estate, and that's really increased his overall net worth. My daughter has not done that. She just didn't have the interest, I guess, to go do a lot of the labor that he has done. He's done a lot of it himself, whether it's the demolition and the remodeling, the rebuilding. My daughter definitely has the eye for it, but I'm not so sure she wants to spend her weekends and nights dealing with rental properties and properties. So, but when we sat down and looked at the numbers and looked at the math, she was like, holy shit, how's Jordan's net worth so much larger than mine? Well, it's like, here's what he's done. Here's the moves he's made. And I think that made her sit and kind of look at some things. And like I said, she said she was going to come to the table at the next meeting with a few different ideas, a few more things that she's working on to help build her overall net worth. So I think a huge win. I would encourage everyone to try and do it. It's different than whatever. Hell, we didn't know anything. Like I said, none of this ever took place when we were kids, so we had no idea what to do or go about this. And so it's all new to us. But I think it's definitely going to be great. The kids seemed to enjoy it. They were the ones that scheduled the next meeting and put it on the books, and they walked away, wanting to continue to talk about it all and learn more and figure more stuff out. So win-win, I think, for everyone.
It's part of the process. I assume it is, but I just want to hear you say it. It's part of the process, the actual the transition when you and Michelle are gone, how where the money is, who gets it, how it goes. So that it's laid out and there's no questions, there's no arguments, there's no family feuds. Is that part of this process for you, or is that different?
Yeah, you'll get a kick out of it. So Kennedy's living in a place that I own outright, right? And it's just a building downtown. It's just one unit of a building, and the unit she's in is probably valued at about $600,000. And Michelle and I own that one, just Michelle and I in the family trust. And I said, look, if anything happens, Mom and I or anything, we get hit or something, get taken out of the game, you're going to have to pay your brother $300,000 for that unit you're living in, because it's worth about $600,000. Oh shit! You should have seen her eyes pop out. What? Why? What do I have to pay him for? I said, look, is this half of your guy, and you're going to have to pay him out of your proceeds on the other stuff. if you want to keep that place and just title it in your name. So no, I mean, we went through a lot of things and worked through a lot of stuff and just showed them where, how it all will play out. And I, showed them how a lot of the rental properties can work as farms for them, what type of rents they're kicking off and what maintenance is required and needed. And, everything from property taxes to how they pencil rates of return and, alternative ways they could play it or do things. And so we looked at each one of the property, each one of our, our stock and trading accounts, all of our positions in various, what our time frames are, where all the bank accounts are at, the different banks, safety deposit boxes, collectibles, art, all those different things we discussed and talked about in detail, and, where to sell things, who to call if something were to happen, where would you sell things, or who's your best auction house, who's not going to want to charge you some huge seller premium, and who's going to let you float on that and auction things this way, and where to go with certain items, and who to talk to about certain things, and phone numbers. We put in this book Michelle has for now, all of them in the safe. It's got all the numbers and who to call on this and who to call on that. And just because when my dad passed away, there was nothing. Yep. Michelle's dad passed away, there was nothing. I mean, it's just like, not saying nothing. They left us a little bit, but everything was we just didn't know anything about anything, and it was just, gosh damn, it was tough on my sister. It was tough on. It's just been tough on everybody that's had a lot of people in our family pass away, because there just really wasn't any super well written plan. And if it was just like it was just a trust that was left, and then you got to listen to the lawyer read it, and there's really no details in that, so to speak, on just the small things on what needs to be done and what how to play these things. So. That's why I thought it was good.
No, it is, and I just would express from all the farmers and things I talked to, and the things I've seen over my 10 years is, and then having personally gone through it with Heidi Inheritance and this farm, is just talk to your kids, communicate, get something done, make it work. I mean, just avoid the pain. It ain't easy, but it's got to be done. So, that's good, man.
And I'll just let you know, we've been talking about doing this for about 3 or 4 years, and I'm just shit you not, we never got it on the books, because we were always like, somebody always had, so somebody's busy, and I know everybody else out there is busy. We just said, okay, this is it. We're doing it, and we are doing it. We're putting a hard stop at it. This is how it's going to play out, and we're going to have the meeting. And, the kids were good, and they cleared their schedule, and we blocked we started at noon, just had lunch brought to the house, but, hell, we went clear to like 7 or 8 o'clock, and they wanted to keep on going, but I had work doing some other shit. But, so, yeah, it was good to see them excited.
I'm of the age now, Kevin. You used the phrase, everybody's busy, and that is what we hear all the time. I'm kind of getting tired of that. I'm like, no, you're not busy. You just have different priorities. It's not that you're busy.
Right, and that was you're right. There's no question. I mean, Michelle and I don't want to sit and talk about us dying or falling off or getting hit by a bus, and I'm sure the kids don't want to either. So it's kind of an uncomfortable conversation. But you just get past that shit in the beginning. You're like, look, this is part of life. Everybody's going to do this. Everybody's got to die. Everybody's got to deal with these things. So here we go, kids. Now discuss this, and then let's discuss how you can improve and help build your wealth for your family, and how you can help put things in place for your kids, and hopefully they'll do the same, have the same meetings, and this will become a family tradition for the rest of the family. So I hope. Perfect.
Well, speaking of wealth, let's go find out some wealth on the acres tonight. Mr. Lezak, are you on board, sir?
I'm here, and I'm listening to your conversation. I think it's absolutely fascinating. My partner Andy's father just passed away, and one thing that people need to do, Kevin, have you saved your passwords and given someone the access to them in case that happens?
Yeah, we did do that actually, which is crazy, right? And it's like we got coaches in there for this and that, and here's the combos for this, and here's all of these things written down. The kids are like, oh my gosh, and I'm like, I hear you guys. So.
I know.
You're right.
Andy's dad just died 2 weeks ago. We're dealing and processing through that, but we don't have his passwords. We can't even get into his cell phone. It's one of those things that just probably is often forgotten. You try to hide those things, but someone needs to have the ability to access that, either in a safe deposit box or something. Put your passwords that allows people to get into your accounts, but we're working on all that.
About cell phone, Gary, that's a good one. Yeah, because I'd have numbers for all my friends and contacts to get a hold of people, and you're right. Probably need to get that written down too. Didn't do that one.
try to get the cell phone. You put in the 6 numbers 3 times, and then it says try again in 8 hours. 8 hours.
Oh, yeah.
Oh boy.
Oh.
Well, Gary, thank you for making the time. Let me do a quick bio. We've had you on before, but we're going to run through this again, and then we'll get into some the penetrating questions that everybody that farms wants to know. So today we have Mr. Gary Lezak, who is a veteran meteorologist and founder and CEO of Weather 2020, where he's pioneered the Lezak recurring cycling model for highly accurate long-range forecasts up to a year. His work helps, obviously, those industries like agriculture, energy, and insurance manage their weather risks. He served over 25 years as the chief meteorologist at KSHB-TV in Kansas City, where he led the market's most accurate forecasting team, earning a Silver Circle Emmy. He's a friend and a partner of the Vantro Ag Solutions teams and FarmCon. Gary, thanks for taking the time today.
Thank you for having me. It's great to be here with you guys, and I'm honored. I always love being on with you guys. I'm very impressed, and I look up to you guys a little bit, so thank you.
Well, we listen, and we appreciate it. I'm telling you something. I'm just going to tell you that I've never heard Kevin speak as he does positively about weather stuff in all the years that he's seen different things. So we're glad to be tied our wagon to yours and what we're doing, and we know you've done a huge amount of help. I personally talked to the farmers and have great stories on how you've helped out them, but everybody's got what's going to happen on their mind right now coming into this year. Without going into the LRC, I think we've described that plenty of times, but tell us what the cycle is this year. Every year is different, I know. Tell us what the timing is, and then let's dive into what to expect during the planting, getting that corn in the ground here in the main areas and across the country.
Hey, let me jump in 1 second, Todd, just to preface a couple.
Yes, sir.
I think the LRC is important because in my world, I came from the trading world, and there were some certain traders and things that came up with technical patterns and technical tools that really, really worked and made people millions and millions of dollars. And so in the last few weeks, I've been getting calls from some of my trader buddies and hedge fund guys. They're like, hey, what's your big weather buddy? This weather guy that you said is the greatest. What's your greatest weather guy have to say here about it? So I've been catching a bunch of my buddies calling, and they say, yeah, that model at LRC, Gary, that really is intriguing. That's something. But and it is important. It's the cycle and really a technical tool that Gary created himself and has come up with along the years, throughout the years of in his wisdom and put this all together. And really, like I said, I've followed tons of weather people through the years and lost a lot and made a little bit, following a few people here and there. But I from what I've seen, Gary has been the most accurate in specific locations and the way the weather moves in these cycles. It intrigues the hell out of me. And so I'm a huge fan of Gary's, and most all my friends know it, and they're like, everybody's now wanting to know, like, well, what's Gary? What's your weather guy saying? So, Gary, hey, no pressure on you, buddy, but here you go. There you go.
Well, Kevin, I raised the bar high. We're not going to be 100% accurate. Like in the stock market, if you're 51% accurate or more, you're going to make money. And go to the casino. The house wins because they're right. If you play perfectly in blackjack or craps or whatever, you'll be right. You can only win 48% of the time. The house is going to win 52% of the time. They're going to win. So that's how it's designed. With weather, it's very difficult to predict. And as I said, I raise the bar very high. It puts pressure on myself, just so you know. I have that every day. And we aren't 100% accurate, but the LRC is. The weather pattern is cycling regularly, and this pattern we're in right now is as difficult not to crack as any, but we've cracked it. We've cracked the code, and this year's pattern is cycling somewhere in the 10 to 11 week range, maybe even longer than 11 weeks at times, which is 77 days or longer at times, and everything is right on schedule. This extreme March we just had, Kansas City has gone from 80s to 9 degrees, back up to 93, the hottest March temperature ever, then back down to 28 degrees just a couple mornings ago. And so these extremes are just going up and down, but it's all related to the pattern we've been in. Some people will talk about climate change as the cause. Climate change is not a cause of this hot weather we just had. The LRC is. The climate is always changing. So what would explain this warmth that we're having right now? It might be decades before Kansas City is 93 degrees again in March, maybe 100 years from now, perhaps. All right, if it happens in 5 years, in 10 years, in 15 years, we'll talk. But I just bet you it's going to be decades before it's 93 degrees again in the month of March. So these extremes are happening, and now the pattern is cycling. We have the blueprint. We have the heartbeat of the weather pattern, the DNA of the atmosphere, the blueprint of what's going to happen. And so as we look forward, this heat that we just had is going to return on schedule in late May and early June. That's a concern as you are planting soon, and how that would affect your crops out there. And then also in August, the first half of August. The question is, between early to mid-June when it gets very hot and mid-August, early August when it gets very hot and we have 2 heat waves, what happens in between those periods? Some summers you don't recover because the jet stream retreats north in June, and if you build heat in early June, it's hard to break. This pattern, though, I do think it will break in the middle, and we're going to have these ups and downs. But this is just a fascinating weather pattern that's setting up, so I'm open for any questions.
Well, Gary, what can you kind of lay out for guys to expect here in the next month? So, I mean, let's go with the drought monitor. Let's just start there, or the planting conditions, overly wet, overly dry. What do you see as we hit the planting stage here in the next month, 6 weeks?
Yeah, droughts are either expanding or contracting. You've probably seen me talk about it in our weather intelligence reports quite often, and I make that point over and over again. The drought conditions at this moment, and I just put it into our report today, it is expanding, okay, just about everywhere. Even Iowa and Kansas and Missouri, where there is not much drought at this moment. If you look at the drought monitor, it looks drought-free. But all around the region, Oklahoma, Texas, Arkansas are in growing drought. Nebraska, Colorado, what a horrible ski season it has been. The snow equivalent water melt for the season is going to be bad. Fire danger is extreme for the summer in that area. But that drought is expanding east a little bit. So Kansas, Missouri, Iowa, concern areas for this drought as it is expanding. So I still would like to watch the next couple of weeks, but when a drought is expanding, it likely will continue as we go through spring into the summer. So it's going to become more of a concern for the agriculture belt, especially the corn belt, where it looks good right now. It still could have a problem. So I'm concerned the drought is definitely expanding at this moment.
Based on where the ridges and the troughs are and stuff, and like right now I'm looking at the drought map you sent out today, and Illinois is still got a little red in it, some of the darker colors. Indiana's still got some in it, but I mean, are those areas going to get the rains that you think? I mean, or is that all still question mark for you? Versus, I mean, I understand west of, we'll just say west of the center of Kansas, it's going to be dry and cooking, but where all that corn is in Indiana, Illinois, Minnesota, Ohio stuff.
Yeah.
I want to put you on the spot on those areas.
It's interesting because that's an extremely important area, as Kevin will tell us, for southeast Iowa, Illinois, and Indiana. There's a strip of drought there that it's gotten pretty extreme in a small little area. But look at North Dakota, not in drought. Northern South Dakota, not in drought. Iowa, most of Iowa is not in drought, but northwest Iowa and southeast Iowa is in a drought conditions at this moment. What I'm expecting with this pattern we have been in, and it's going to continue right on through summer, we'll get the summer version, by late spring and summer, there's going to be a band of thunderstorms that will extend from North Dakota across Minnesota, Iowa, to Missouri. Now, that area of Illinois and Indiana that area is going to probably be closer to that thunderstorm zone. Southwest of the thunderstorm zone, Kansas, Oklahoma, southern Missouri, that could be a big danger area for heat and for expanding drought conditions, but it's close. And so I'm expecting this corridor of thunderstorms from North Dakota down across Iowa to Illinois. It might save Iowa from being in drought, which is extremely important for the traders out there. But no, just southwest of there, it is going to possibly be a problem. So that's one thing to be concerned with. And another big concern, a lot of people are thinking about planting right now. We've had this big warm up, another cold front's coming through on Thursday and Friday. The LRC model does show a potential frost or freeze in the first half of April. So 5th of April to the 15th of April, there's going to probably be one more pretty strong cold front. Could drop us not to 8 or 9 degrees, which would be just brutal, but 28, 29 weak hard freeze is possible one more time mid-April before it fades. So a lot of people are thinking about moving their planting till about that time rather than take that risk. So just something to keep in mind. I'm looking for that. If that starts showing up on the other models, I will let you know.
Perfect. Now, do you flipping the coin onto the wet? Do you see anywhere in the heavy corn area states where there's going to be delays from heavy rains or anything? Is that on the radar yet?
Nothing significant. There's going to be severe weather windows we can go over, but the overall picture is even the wet weeks look to be near average on rainfall. So when the LRC model shows it shows near to below average every single week. That means in April and May it starts becoming about 3/4 of an inch of rain in a place like Kansas City is an average week. So a little bit below average would still be adequate if you get 0.6 of an inch liquid. You just don't want to get mist and have it be dry on what was possibly going to be a chance of thunderstorms, and it misses you, and then you have another dry week that compounds on that. Nothing significant showing up at this moment, but early April 2nd, 5th, we're seeing a window for some severe thunderstorms that are going to be possible.
Well, I will say this, based on last year's deal, you made some serious believers out of a lot of our clients who adjusted and went early based on the rain in their forecast they learned off the dashboards that they got, and it made a huge difference. I mean, one guy stands out. He was 95%, Larry, on your program, and now he's 95% on board. So it's a great tool in that deal. So it sounds like planning could mostly be decent conditions for now. You covered the freeze. Go ahead and transition in then the severe storms that you were mentioning about what you see there.
Well, severe weather season's already had some active activity. What just happened, the big, huge hail that happened around Kansas City and Parkville, that was ridiculous. Did you see? Kevin, did you have any hail? Did you get any hail?
Well, it was all around us. My son was cheering for hail. He was up all night trying to film because he wanted a new roof. He didn't get any.
Oh, boy, yeah. But it hit parts of the city, and it was like bigger than baseballs in some spots. So there are going to be some fortunate people, I guess, that get a new roof. But that part of the pattern that just happened will come back through May 22nd to June 3rd. So remember the pattern cycling about that range. So you take what happened in mid-March, late May into early June will be that window for that part of the pattern. Could be a major outbreak of severe weather in that window. So that's an opportunity for some rain, some beneficial rain. You get 3-4 inches of rain, 5 inches of rain might sound like a lot and too much, but it would be a good. It'd be very good for that to happen, because right after that period is when that heat will build in. See how it works with the blueprint? We had the severe weather followed by this tremendous heat we just had, and then a cold front's coming through. That same cycle is going to continue, but the jet stream retreats, and as we go into June and July, the same pattern, all of a sudden the cold fronts might stop in northern Iowa, and where the heat's building up, it could be consistent for a long period of time. Oklahoma, Texas would be that biggest concern.
Gotcha.
Hey, Todd,
Yep.
I'm going to give the listeners a rundown on the weather markets that I've traded through my life. And it's what you really look for in weather. And weather markets, like I said, are different than demand-driven market. So weather market's a supply-side issue, and that's kind of like the conflict right now in the Middle East. It's a supply-side issue with the crude oil and the energy. So weather markets tend to trade extremely fast to the upside, meaning extremely volatile, and they'll break extremely quickly. So, like, if you're in them, you got to be in them, and you got to be looking for the exit a little bit early. And if you stay in too long, it'll just all dissipate on you and be gone, because they just trade that way. Supply side fears trade that way. So we tend to look at in the corn market, which is the biggest, most traded ag that's out there. You look for weather problems with planting. So if there's planting issues or concerns, typically through the I states, so Illinois, Iowa, Indiana are your big ones. When you get west into Kansas, Nebraska, Colorado, so much of that corn's irrigated, there's not as many concerns. So the old traders' adage was, plant in the dust and the bins will bust, right? So you wanted to plant into dry conditions. You're not looking for a lot of moisture and a ton of wet fields. And so, if we got heavy rains coming into Iowa, Illinois, Indiana, those places, the market would start to add some weather premium, thinking that there's going to be fewer corn acres, and that some of those corn acres are going to switch to soybeans because soybeans get planted later. So the market will add some weather premium there. The next big one then, Todd, is pollination. And so if corn planting were to get pushed back, so the planting starts from the south down in Texas and works its way to the north throughout the United States. But if the planting were to get delayed in some areas, all of a sudden you have a tremendous amount of U.S. corn all being planted at the same time, which means it'll all pollinate at the same time. So if you get a lot of corn all going to pollinate in the same week, now the market may add a little more risk premium, because that week becomes extremely critical, because if the corn doesn't pollinate, they'll knock a shitload off the yield, and the yields will start to drop and production becomes a problem. So typically most U.S. corn will pollinate third week of July, fourth week of July into early August. So that period right there will be mission critical, Todd. And then I have traded some flooding into the peak harvest season, and the flooding caused corn prices to just rally dramatically a couple of times throughout my life. So there are like three kind of interesting areas there in corn that traders really focus on. Like I said, that planting forecast, that pollination, couple of weeks of the majority of the corn pollinating, and then that harvest, what'll happen or take place in the harvest. So, I think those what really we dial in on, and Gary's provided some good intel on that the last few years that we've been following, and I think that's what and corn growers and producers, those are the areas you want to focus on. And when the market rallies into those, or if there are headlines or forecasts that would allude to there's going to be some problems, the market will build that premium in, and that's when you want to be pricing some of your bushels. And and I know it seems like the scariest time, but that's typically when you want to be trying to price some bushels into that elevated weather premium. So, hate to interrupt there, but I just kind of giving guys
no, that was perfect, Kevin. And I'm honest with you. I mean, I probably need some of that stuff, but not put together like that. Hell, Gary, that makes a nice little template for you and I to do some coverage on throughout the summer, and just update each of the, update each one until we pass each one and stuff.
Believe me, I was listening. I was listening, and the one thing I think everyone would agree with what can happen, fall starts. We have this early warm period in March. It gets up to these record-breaking, shattering temperatures of this warm weather we're dealing with, and it can become a trap. You plant right now, and then you have the frost or freeze. But just know that if you delay 2 or 3 more weeks, you're going to get the crop in, maybe after that freeze risk, and you'll be fine. You could take a risk a little bit before then, and I'll try to provide insight. If I don't see any frost or freeze showing up here in the next week or two, I'll let you know. But just know that you're going to have a recovery window. I think we provide these windows, and I've got those dates written down about pollination, and we got to look and see when is the heat most likely. First half of June, first half of August. Those are the most likely periods, so we might be able to be fine in that pollination period.
And see, Todd, that's kind of and Gary, that's kind of the thing. this year it's going to be even more instrumental for the producers on their decision because of the higher input costs. And the last thing you want to do is run out there, plant early, then run into a frost-free situation or some type of major rain event, like you said, it could possibly occur at someone. But then you have the additional input cost on the replant, try to get more seed delivered out to, and there could be tight on seed, and then they're tight possibly on nitrogen right now, and you're looking at additional inputs. But keep in mind, Todd, if you wait and you don't plant, right, and you wait until all that kind of clears out, now you're pushing your pollination dates on your corn into what typically is more heat into that early August, mid-August period. And that's the same thing we look at, Gary, in South America, where Brazil now, the majority of their corn production, this is crazy to even think, about 80%, 75-80% of their total corn production, Gary, comes from second crop corn. And so that means they have to plant their beans, harvest their soybeans, and then after they harvest their beans, they plant their second crop corn.
Wow.
And what happens is if that soybean harvest gets delayed, it's running a little bit delayed right now this year, but if it gets delayed too much, now then it puts the second crop corn in harm's way of more volatile weather because, in South America, the rain just kind of shuts off completely, and it'll put that corn in a real pinch if they plant it too late. So a lot of times in South America, if they don't get the soybeans out of the field in a timely manner, they just simply won't even plant second crop corn because they don't have the type of insurance, government insurance and things like that we have here. And so, because it puts the corn in too dangerous of a position at a key pollination period. So that's what I'm trying to tell everybody. And the weather's just so crazy critical for farming and for big production ag. And it's like, it's just a really tricky game you're playing on. When do I plant? When do I not plant? How do I get this harvested and that? And so, yeah, it's everything. The weather's kind of everything here. So, it's a lot of interesting high pressure decisions and thoughts going on for a lot of producers out there right now this time of year. So good stuff.
And if you look at Todd and Kevin, if you look at South America, it's fascinating. They've had a very wet season. It's really been wet. Nothing too extreme. They get wet there anyway, but it has not been a big problem down there. Now, remember, here it is. The first week of spring. Remember what happens in the first week of fall in the northern hemisphere? The new LRC sets up. So what's going on right now in the southern hemisphere is the new pattern for the season is establishing, and it's going to be completely different than what has been happening the last few months. Something brand new is setting up.
Okay, I didn't realize that, but I should have. Yeah, that's I didn't even think. Yeah, you're right. That is. Yeah, that's interesting.
Yeah, so, just know it's something I don't talk about, but the Southern Hemisphere has its own LRC down there. It's because it's the exact opposite, and they're probably tied together. I still haven't put that together, how they're tied together. I'm still working on that one, but just know brand new patterns setting up down there. So the rain patterns they've had will shift in the next few weeks.
Okay.
Well, Gary, let's touch on this because I've seen varying reports on Enzo transition, when, where, how powerful. And, I mean, if it were to come early in June, like some people are prescribing, I mean, wouldn't that be bringing a ton of rain? But give us your thoughts on the transition.
La Nina.
La Nina, El Nino. They call it Enzo, ENSO. I'm sorry, I tried to sound professional.
The El Nino Southern Oscillation Index, ENSO. Yeah, El Nino is the warming of the tropical Pacific Ocean, and La Nina is the cooling. We've been, in the last couple of years, we've been under the influence of La Nina, and now an El Nino is forecast to develop, but it will not develop by June. Okay, it just won't. It'll develop sometime this fall and into next winter, and possibly be a strong influencing El Nino. You'll hear a lot about it, and I'll be talking about it. But remember, that's just an influence. The LRC is the centerpiece of the big atmospheric jigsaw, I always say.
Correct. Yeah. But I'll tell you what, there's a lot of fear-mongering going on. Not fear-mongering, but I mean, I see these tweets and everybody talking about it's coming, it's going to come. I mean, if it does come this summer, or when it does transition, remind us who gets the wet, who gets the dry, generally speaking, across the U.S.
But if let's say El Nino does start developing by June and July, okay, it's too late. The jet stream is retreating north, as it always does every summer, and the jet stream is caused by temperature contrast, and so what happens in June and July, the temperature contrast becomes so weak, the jet stream will lift to the Canada border and be weaker. So regardless of El Nino or La Nina, it's not as big of an influence during the summer. All right, there is some influence in the tropics, no doubt about it. It can be an influence in the tropics. So we'll look at that for possible hurricanes, and when I issue my hurricane forecast here in a month or so. But right now, just know that it doesn't have much of an impact. It's just not. It's too late for it to affect the June weather pattern. Now, next fall, next winter, that's what El Nino is going to start to become an impact. So right now, it's not a big concern. This pattern is just going to continue into the summer.
See, Todd, that's kind of what I was telling you. I mean, I think a lot of these people write these things just to gain headline attention and get 100%.
100%. Don't get started on that. Oh boy.
No, it's great. That's why I appreciate having Gary on here and giving the insights.
No, I agree.
I mean, it clears it up. I'm just listen. We don't do sales, but I'm just telling you, this is a tool that you want to have. If you have that dashboard, you get county specific. You know what weeks it's going to be. It's just crazy. So anyway, there'll be a link when the report comes out with this thing to go check it out deeper. But Kevin, I don't have any more. Gary, is there anything you need to add, or Kevin, any more questions, or we'll let Gary, do the final say? No. I ran through my questions. Like
you said, Todd, I use Gary's in more in generality trading, but a lot of my partners and people who are on our farm operation, I mean, it can get down to a micro level and to a specific area and field, and so I think that's crazy to just see how far some of these weather tools have advanced in the last several years. And I know Gary and his group are kind of on the leading edge out there and trying to make a lot of this happen. So, I've been more than happy with everything, and glad to have Gary on our team and trying to help out our producers and the people in the ag businesses that need that intel. So, like I said, you're only as good as the intel you get. So, like I said, I sure appreciate it, Gary.
Thank you so much, Kevin and Todd. And just know that, as you know, the message we're providing today is very different than a year ago. And next year will be different again. Every year is unique, and this pattern, we're all experiencing it. Everything is unique. It's never happened before.
Yeah, for sure. So, you been traveling anywhere, Gary? On a personal note, you been doing anything? You been traveling anywhere?
Tomorrow is my dog's 11th birthday, and I've decided I want to appreciate her life. Our dogs can be our best friends, and Rainbow and Sunny and I are going to go on a trip. I'm going to meet Andy out there in Los Angeles for his 50th birthday, but I'm going to take a road trip. I'm planning on a 2-week road trip coming up in May.
Oh,
so
really?
Looking forward to that. Yeah.
And you're going to road trip out? You get a camper for that?
What time?
Oh, go ahead, Kevin. I jumped in. Go ahead, Kevin.
Go ahead.
Well, I was going to ask you because you said road trip, and my mind goes to something my wife and I have been talking about, getting that 30-footer because we got dogs. And, are you just putting them in the car and going, or are you going to take a little camper?
Hey, I'm a 5-star hotel guy, so I'm going to hit the road, get to Moab, find the nicest hotel, get to Wickenburg, stay at a friend's place, then go to Palm Desert. Stay at the Desert Springs Marriott and just do things like that. They allow dogs.
There you go. Good stuff.
Todd, you're going to California. Todd, aren't you going out to California?
No, as it turns out, I'm not.
Oh.
I was maybe going to go. I got out there and speak for some guys that came to FarmCon, but did not shake out. But no, eventually we are going to head up to the Northwest and get our camper and go take the dogs.
Gary, I always love that drive. I love that drive down 101 from San Francisco to L.A., that whole area.
Yeah.
That's just one of the most beautiful drives there is.
It is. That is incredible. Morro Bay, Monterey, and all that stuff.
Oh, yeah. It's awesome through there. So.
Oh, hey, Gary, I forgot. Travis signed his contract yesterday, I heard.
Oh, he did?
Yeah.
He did not.
Gary, you still there?
Yeah.
You're the biggest Chief fan. I figured you'd have some insight on that.
I know. I just like I mean, Travis Kelce is an amazing player, but I personally think that he probably should have retired. I'm just
really okay.
I'm just on that bandwagon. I don't want to see him embarrass himself. Not too many 36 and 37-year-olds do anything unless you're a quarterback in the NFL. You know.
That's true.
I didn't even see the headlines. I can't believe he signed again. I thought for sure
a 3-year contract.
3 year, baby.
No way.
Yeah, but only the first year is guaranteed. They set it. They arranged it where it doesn't hit the cap, so he got a 3-year contract to spread it out. But he's probably going to play only 1 more year.
I would imagine. But Gary, sounds like they've built. I mean, they got their old running back coach. I mean, offensive coordinator Eric Bieniemy back, and they've got some. They got some running backs. I mean, it sounds like they're making the push to get Mahomes a couple more Super Bowls.
It's going to be completely up to Mahomes. Is he going to be healthy, and how does he respond and grow? The potential, it's so exciting. I think they've got the players, they've got the running back for sure. And if Mahomes comes back and by week 2, week 3, week 4, he gets into becoming Patrick Mahomes like we know, the Chiefs are going to be very good this year.
Yeah, it's going to be fun to watch. Cool beans. Well, listen, that's all I got for today, Gary. Thank you so much again for making the time. We'll look forward to getting a story from here soon with some more updates and go from there. Kevin, thank you.
Yeah, appreciate it, guys. A lot. See you later.
Take care.